Tesla's a big story today, Bryn. Let's address this. The limited launch of Robotaxis in Austin on Sunday. UBS raised their price target to $215. Okay, the stock's at $354. They reiterated their sell rating, so they remain negative, even if they bumped their price target well below where it currently is. Dan Ives was overjoyed by the experience. I mean, how else do you describe it? He says the golden age begins. I'll leave that wherever. The point, though, is that Elon Musk has bet the farm on this. He's bet the farm on autonomous. Are you optimistic as a shareholder that they're going to deliver?
I think when I look out 5 years, robots, autonomy, licensing FSD, just not FSD, solar, the collective of the company, I think is very positive. When I look back over the weekend at my returns and my trades, I've actually made more money selling calls on Tesla than on the stock itself. And so I think that's where investors need to understand right now is that I think that 380 to 400 is a cap. We saw last week when he quit the White House or what have you, it got down to 280. And so I think that the challenge to me to get above 380 to 400 is that actually the current business, which is cars, those underlying fundamentals are eroding. And so I think there's a lot of premium in the stock, and I do think I would never underestimate Elon and his team, but I still feel like selling calls against the majority of my position is going to be a way where I can have a better total return than just being long only at this point.
It's a really interesting perspective to say that the underlying fundamentals are deteriorating. I mean, that's the bread and butter of how one would typically assess a stock. Phil LeBeau joins us now. Of course, he covers the company. So you have, as Bryn suggests, Phil, fundamentals that don't look good, okay, against
Correct.
This moonshot, if you will, that rolled out in a limited fashion. And investors like Bryn are trying to figure out, if you put all of it into the pie, what it's going to taste like at the end of the day. Is it going to be good enough to be what investors are betting on?
And nobody knows, Scott. That's the black box of this entire thing. Was it a successful weekend in terms of there was no major disengagement? There was no video that got posted of an autonomous robotaxi doing the wrong thing on the road? No, there was not. All of the videos from the influencers show what appears to be a normal ride. But keep in mind, this was extremely limited. When you look at the launch yesterday, you had 10 to 20 Model Ys with the full self-driving technology, autonomous vehicle technology. There was a safety monitor in the front seat, not in the driver's seat, but in the passenger front seat. There was also a remote backup driver monitoring every single ride. If they had to engage or they didn't engage, we don't know. Nobody's told us that. And the flat fee for those who took the service, $4.20. Guggenheim out with a note today saying, by the end of this year, we believe the pace of expansion needs to be closer to a sprint to justify lofty robotaxi expectations that are embedded in the Tesla valuation. As you take a look at shares of Tesla, that's the bottom line here, which is what Bryn was talking about, which is you believe in Elon Musk, you believe in autonomous, you believe in Optimus, then you believe that 5 years down the road, they are going to be perfectly positioned. But between now and then, Scott, certainly between now and maybe the next couple of months, you have no idea. I mean, yeah, they will probably come out and say, we did X number of rides and everything was fine. But we don't know. We don't know what this is going to look like a year from now. Will it be as widespread as Elon Musk has said it will be, or will it be much more subdued? And if it's much more subdued, then the question becomes, if you're a Tesla investor, do you still believe that by 2030 it will be as large as many project it will be?
Yeah, thank you very much for that. I mean, there's always been a little bit of built-in we don't know, Joe, as it relates. It's Phil LeBeau with that reporting for us. Always a little bit of we don't know.
Yes.
When it comes to this company. You know, we don't know what the sales are going to ultimately be. Do they match the projections that are put out? Will this end up matching the some of the hype and the hyperbole that's been around all of that. Of course, we're doing the 420 thing again, too, which I'm sure everybody's taking note of as well.
Yeah, I'm sure Waymo's taking note of that as well because they're charging a much higher price. So this is a very deflationary effect when you're telling me this is $4.20. I'm not sure. I think Waymo is somewhere around $15 or $20 for a ride. But this comes at a moment where we don't know, but it's critically important that we do know because to Bryn's point, you've seen deterioration in the revenue growth for this company. They need something to revive that revenue growth, and a lot of the analyst community is expecting that ultimately this is what it's going to be.
Well, you have a decision to make coming up. You're going to be thinking about your rebalance in literally a matter of days.
So the rules at the end of July will really have this convergence of two factors, one of which continues to deteriorate, and that's the quality factor. The quality factor on Tesla doesn't look good. Now, you've had a 38% recovery so far quarter to date, so the technicals and momentum look a lot better. But, it kind of just snuck into the portfolio. 125 holdings was probably ranked right towards the bottom, so it snuck in. I don't know if it can maintain that, but I'll say this. 10 to 20 vehicles being monitored, I'm not so sure you get very excited about that until you have the firm evidence that they could scale it, that you're talking about 1,000 of robotaxis in LA, San Francisco, not just in Austin.
You know what nobody mentions, and we've heard three people talk about it? Profitability. This is not going to be profitable for them for a long time. It's not like Uber, where the costs for maintenance, the costs for insurance, the costs for the vehicle are absorbed by the driver. So all Uber does is split the cost, right? They split the fare, rather. So with these, and I've got this from good sources on Waymo, it's going to be a long, long time before they make money, number one. Number two, Waymo is cheaper than Uber. We reported last week that, and I was just in San Francisco, rides were under $10 wherever you're going in town, so substantially cheaper.
But Waymo's more expensive.
Right, but they're not going to stick with that cost. That was just media. He's great at playing the media. To me, I appreciate Bryn's perspective, and she's been dead right on this and made a lot of money on it. I still think it's the most overhyped stock on a long-term basis I've ever come across.